Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the confusing world of corporate filings and somehow make it interesting. Today we are dissecting PharmaCyte Biotech's latest proxy statement, a document that tells us a lot about where this company is heading and why. It is packed with details about their upcoming shareholder meeting, executive pay, and some crucial votes that could reshape the company. Alright, so what exactly is a pre-14 filing? Well, it is a preliminary proxy statement. Think of it as a draft before the final version is sent out to all the shareholders. It gives us an early look at the key issues that will be discussed at their annual meeting. Let's flip through the pages of this document. We have got the usual introductory stuff, the invitation to the annual meeting, and a heads up about what will be discussed. The annual meeting is scheduled for the 30th of March 2026, and it is going to be a virtual event. This means you can attend from anywhere just by registering online. They decided to go virtual to make it easier for more people to join and to save some resources. So what are they asking shareholders to vote on? Well, there are a few big ones first. They are electing 5 directors to the board. Then they are asking to approve their independent auditors, CBs, CPAs, PC for the next fiscal year. A really important vote is for an advisory approval of executive compensation. Essentially, shareholders get to say if they agree with how the top brass is being paid. And then we have a couple of major proposals. The first is to approve a reverse stock split. This is when a company consolidates its existing outstanding shares into fewer but higher price shares. They are proposing a ratio anywhere from 1 new share for every 1.1 old shares up to 1 new share for every 100 old shares. The main reason for this is to boost the stock price. Why the urgency for a higher stock price? Apparently PharmaCyte Biotech has been warned by the Nasdaq stock exchange that their stock price has fallen below the $1 minimum requirement. If they don't get it up, they could be delisted, and that is a serious problem. Delisting could make it much harder to trade their stock, leading to less liquidity and potentially a lower overall value, which is definitely a risk for investors. The last big proposal is to amend their 2022 equity incentive plan. This is basically a plan that allows the company to give stock options and other equity awards to employees and executives. They want to increase the number of shares available for these awards by 2 million. This is often done to attract and retain key talent, especially in a competitive industry like biotech. Giving employees a stake in the company can align their interests with those of the shareholders. Now let's talk about the money, the compensation of their top executives. For the fiscal year ending the 30th of April 2025, their Chief Executive Officer Joshua N. Silverman received a salary of $375,000 and a bonus of $100,000. The Chief Financial Officer, Carlos A. Trujillo, had a similar base salary of $380,000 and a bonus of $50,000. These numbers are important because they represent a significant portion of the company's expenses and directly impact the bottom line. It's crucial to see how these compensation packages stack up against the company's performance. This section is really interesting because it directly links executive pay to company performance. For I-2025, the compensation actually paid to Mr. Silverman was around $594,690. For Mr. Trujillo, it was around $519,234. Now compare that to the company's net income loss, which was a positive $30.7 million for FY 2025. This shows a healthy gap between what the executives were paid and how much profit the company generated, which is generally a good sign for shareholders. However, looking back at FY 2023, the company had a net loss of $4.3 million, but the compensation paid to some executives was still substantial. This highlights the importance of the advisory vote on executive pay. As of the 30th of April 2025, there were over 1.1 million securities to be issued upon exercise of outstanding options with a weighted average exercise price of $2.14. And importantly, there were over 1.7 million securities remaining available for future issuance under equity compensation plans. This tells us that the company has a good number of shares available to grant as incentives, which is crucial for attracting and retaining talent in the competitive biotech sector. The audit committee confirms they reviewed the financial statements for the fiscal year ended the 30th of April 2025. They also discussed important matters with CBCPA's PC, their independent auditors. This report is vital for building investor confidence in the accuracy of the financial reporting. This section is where companies disclose any dealings between the company and its directors, executives, or significant shareholders. PharmaCyte reports that they made payments to Vin D. Bona, a consulting firm for services related to their scientific endeavors. They also mention a significant investment in Pharmacyte Incorporated and a purchase agreement with TNF. These transactions are important because they could represent potential conflicts of interest or opportunities for the company. As mentioned earlier, the company is seeking to elect 5 directors. These individuals are responsible for guiding the company's strategy and overseeing its operations. Their backgrounds are diverse with experience in investment banking, management consulting, and even medicine. Having directors with varied expertise is usually a strength for any company. This is where they are asking shareholders to approve CBCPA's PC as their auditors for the fiscal year ending the 30th of April 2026. Prior to that, Markham was their auditor, but CBCPA's PC acquired Markham's Attest business. It's good to see that the company is transparent about its auditor changes and the reasons behind them. This is the say on pay vote we talked about. Shareholders will have their voices heard on executive compensation. It's a non-binding vote, but it carries weight. The company states that they will consider the results when making future compensation decisions. This is a big one, as we saw they are facing delisting from Nasdaq if they don't raise their stock price. A reverse stock split is their proposed solution. They believe this will make their stock more attractive to institutional investors and avoid delisting. However, reverse stock splits can sometimes be viewed negatively by the market, creating a perception of financial distress. The success of this proposal will depend on how well the company can maintain that higher stock price post-split. This part is for the tax pros and anyone who likes to wrangle with tax codes. It explains how the reverse stock split might affect a stockholder's taxes. Generally, it is structured to be a tax-free event unless you receive cash for fractional shares. But remember, always consult your tax advisor on these matters. Finally, they want to make changes to their 2022 equity incentive plan. They will be adding 2 million more shares to this plan. This is a common move to ensure they can continue to offer attractive stock-based compensation to employees, consultants, and directors. It's about motivating the team and aligning their interests with those of investors. Now for my take on PharmaCyte Biotech's current situation, looking at the financials, specifically the gap between executive compensation and company net income. In FY 2025 is a positive sign. It suggests that while executives are being compensated, the company is also generating profits. The planned reverse stock split is a necessary measure to maintain their Nasdaq listing, but it comes with inherent risks. The market can be fickle, and a reverse split alone does not guarantee sustained stock price growth. The increased availability of shares for their equity incentive plan is a strategic move essential for talent acquisition and retention in the highly competitive biotech industry. Their continued investment in Pharmacyte and TNF also indicates a strategy of diversification or further integration, which will be interesting to watch. A critical weakness here is the continuous need to address the stock price for Nasdaq compliance. While the reverse split is a short-term fix, it does not address the underlying business performance issues that led to the low stock price in the first place. The company's direction seems to be focused on survival through listing compliance and talent management as much as it is on core business growth. So what is the verdict? PharmaCyte Biotech is making some bold moves. The reverse stock split is a high-stakes gamble to stay on Nasdaq, and the equity plan amendment is standard practice for growth. The real test will be whether they can translate these strategic maneuvers into genuine long-term business success and investor value. Alright, that is our deep dive into PharmaCyte Biotech's latest proxy statement. What do you think about the reverse stock split and the executive compensation changes? Let us know your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe to Corporate Decoder for more breakdowns like this. And don't forget to join our Discord community linked in the description for more discussions and to connect with fellow corporate curious minds. Thanks for watching and well, see you in the next one.